Hey guys, ¿qué pasó? What's going on? This is Hala Pablo. We're rolling, mic's working, everything's on. All right, let's look at Bitcoin. I know Bitcoin's pumping again. We talked about this the other day, that it was a possibility that we're going to see another rally where it's going to move up within the macro wedge that it's in right now. Kind of feel out, try to get some space within it, try to get some buyers to jump in. The end game of it all, of course, is for smart money to sell their positions, to dump their bags at macro trend resistance. But right now, we're not at macro trend resistance. We're well within the wedge, as you can see. This is a macro wedge, guys. Now, this is on the daily, where I think you could see it best. We see this reverse head and shoulders here. And then, all what wedges are. You see this? I want to show you something. And this will help you with your pattern recognition. So, you know what triple tops look like, double tops, triple tops. See, here's a top right here. This is basically a Wyckoff distribution range. That's what tops are. They're distribution ranges. You usually have a high point, then you have a U-tad, and from there it sells off after the up thrust. And so usually they're linear. If it's a true distribution, meaning it's like a lateral movement. But every once in a while you get a top which is crooked. You get a crooked top. And so that the tops in the bottoms, the highs and the lows within this distribution is on an incline. And that's what forms the support and the resistance of the wedges. The top line, the resistance, is just a loosely drawn trend line along the rising or the tops, the rising highs. And then the bottom is the trend support, is just the rising lows. And because the top is crooked, you get a wedge-like structure that is slowly climbing up, that is going up. But the thing about wedges, which gives it away that it is a bearish, ultimately a bearish structure, is when you go down and you examine the volume. The volume. Do you see here how you see these large demand spikes? I'm always talking about this. See how these just stick out? They just protrude over the rest of the volume. This is what I call predominance. It's kind of like looking at a skyline of a city and seeing the tallest skyscrapers. If you're looking over Manhattan, you would see the Chrysler Building. You'd see, well, before the World Trade Center collapsed, you'd see the Twin Towers. You'd see the Empire State Building and such. You could do the same thing if you kind of train your eyes to look at volume metrics like that. You could quickly see and discern where the predominance is. And here we certainly see it's in demand, which would make sense because we have this counter trend rally, which has been going on since November of last year. It's been almost a year now that we've been stuck in this trend. But it's a counter trend. We've been in this counter trend, which is on an incline. But if you notice, and if you got to scroll out to the higher time frames, to the daily, and you'll see every time the price action touched a area on the macro trend support is where we've seen the supply, the demand predominance, the demand bars register. So that's normal because smart money wants to keep the price. They're careful to keep the price within this range. They want people buying. They want to trade this area here and make money. They've got all of their bots that they use. Everything is algorithmically programmed within this range here, and so they want to play the game, and so they need people to buy. So they're not going to let the price go down too low. So when it hits a certain metric, yeah, the buy orders are triggered, and that's what gets these volume spikes in the vertical bar volume. You also see them in the Weiss wave here and here. Okay, so these are the lows. And I want to direct your attention to one thing, and this is the giveaway that this is a top. this is a crooked top. This is a rising wedge. This is a macro rising wedge, which is bearish, ultimately bearish. The end game is a dump. The end game is sell-off in this. We don't know when it's going to happen, but it will. All the volume metrics are pointing to it. See these demand predominant spikes. They are all decreasing. See, they're decreasing. This one we got a good read on this latest one. But since January of this year, there has been a noticeable diminishment in demand, which is in clear divergence to the upward price action. So you got the price going up, but demand is falling. That is divergence. That is a bearish ultimate signal. It's ultimately bearish there. So, and then here you see the tops. You see these up thrusts where these rallies, these micro rallies within the macro wedge kind of peak out. Yeah. And you don't really see too much supply coming in, not like the demand, but stoppage supply does come in, and it propels the price action back into the structure, and that's what causes the ebbs and the flows and the heads and shoulders and the inverted heads and shoulders that take place, all of these things which take place within the macro rising wedge. Now, so we come to where we are right now. We do have a let's get rid of some of these marks here. Okay. Yeah. So we come to where we are right now, and we've had this kind of 3 bounce hug off macro trend support, and now we're seeing another rally. We're seeing an effort for the price to kick back up and back into the wedge, and possibly to create another inverted head and shoulder, kind of like we saw here. And so it is entirely feasible that this price action could go back up and up to the macro trend resistance, which would bring us up to the 30,000s, 30,000 level, 35,000 even, before we see any kind of sizable stoppage supply coming in. Where are we at? 7 minutes. Okay. I don't want these videos to go over 10 minutes. So anyway, the price can certainly come up here. I don't want you to get alarmed. Don't feel like you're going to miss the train if you don't buy in. That's exactly what smart money, what the composite operator wants you to do within these wedges. At some point, it's going to top off, and we're going to get the macro dump from this rising wedge is going to break. That's what all wedges do. It's just inevitable. You see it over and over again. If you look into Bitcoin's price history, you see that there are always, after a macro bull market, there are counter trends that could be quite extensive, sometimes 400 to 700 days long. We've seen this one. It's already, at least 365 days we've been in this rising wedge. So you see it here. But the point I want to make, at some point, always, the price action breaks down out of the counter trend. The tops are sold off. The institutional smart money sells into the pumps. And at some point, the macro wedges, the rising wedges break, and the price goes back down to retest the lows. And so you see that here where this low was mitigated. See, the lows are always mitigated. Here, this was a regular, this was a descending triangle that with like a flat line support zone, but like lower, like diminishing highs, and that eventually dumped to come back down and mitigate this area here. This was, it's good to look in the history. This was 2017, and then they meandered here for a bit, and then we had another counter trend that came up. This is still a counter trend. It didn't dominate the highs of the previous bull cycle, so I consider it still a counter trend. And this came back down again, and here even, I'm sure like in this area here where it was pumping, people were thinking it was this was it, and we're going to go back up to $19,000 Bitcoin. But what did it do? Instead, it dumped again. It dumped. See, there's a wedge right here. If you were to blow this up, you would see the wedge. And then it dumped back down to remitigate the lows of a year prior. So you see these lows being mitigated. And so we're going to see that too, I believe. At some point, this rising wedge is going to come back down after retest. I don't know how high it can go. It can go all the way up to $45,000 potentially before it comes back down and crashes and retests. I believe it can retest the $16,000 zone here. And then when it does that, and only after it does that, we can expect the bull reversals on the macro, which happened right here. And so that's when it goes up and it makes a new all-time high ultimately from there, and then forms a whole new distribution cycle in the Wyckoff. And then from there you get into you can go ahead and map out all your schematics and your secondary tests and all that on the macro. We haven't gotten there yet. We need to form a larger base to support this kind of thrust. This kind of thrust is not sustainable with not retesting the lows of this distribution cycle that we had last year. It was in 2022 when everything dumped. And so just don't be fooled. We're in a counter trend right now, and there's certainly money to be made, but don't think that that it's impossible to go back down and retest the lows that we saw earlier last year before we go back up. People are talking about $100,000 Bitcoin or whatever. No, I don't think that's going to happen. I think there's the crypto market. We haven't seen the worst of it yet. I think this country is potentially going into a recession, and it's going to be reflected in crypto. Now, the good news, if Bitcoin tanks, Bitcoin goes down, we could see the alts rally. And see, when Bitcoin weakens, we have altcoin dominance and vice versa. I'm expecting at this point here, when we come back down, and the way we'll know it is you'll see large, very, very large stoppage supply coming in once we hit the macro resistance of this rising wedge. And as Bitcoin falls back down through the structure, we'll see supply continue to grow. And that will be the sign. If it comes back up to retest and get back into the structure and it fails again there, then that would be the cue that we could be going back down into $15,000, $16,000 Bitcoin to remitigate these lows that we saw in November of 2022 last year. So just be careful. No matter what your bias is, be careful as long as we are trending within this wedge, and you'll be all right. All right, if Bitcoin does anything else noticeable, I'll try to get an update to you. But for now, that's all I see right now, and I just wanted to help you guys out and give you some encouragement. People that are a little confused or unsure of where to go, where we're going right now in this market. So, all right, guys. Thank you for tuning in. Like, subscribe if this was any help to you. I'd really appreciate it. Build up the subscriber base. Maybe kind of get these videos more on the YouTube algorithm. Make them more prevalent to help out newer traders and even traders who have been trading for a while, but you don't trade volume price action. You're stuck on indicators and RSIs and MACDs. I'm not knocking people who rely on those things, but I just believe that price action volume's king. And, the professional traders, the banks and all that, the guys that are really like in the pits, Wall Street, they're not using indicators. They're using price action volume for the most part. So maybe stochastics, but in VWAP, but it's mainly price action volume is king. So that's what I'd like to foster and help people with, and just get people into so that they learn how to trade that way and maximize their results. You can check out my trading history on TradingView, halapablo.com. Halapablo TradingView account, 80 to 85% win rates. I have my entire trading history on there for anyone to check out. So I back up my words and my technical analysis with results, and anyone can go on there and see it. So, all right, guys, let me let you go. This has gone on way too long, 14 minutes. I wanted to cut this off at 10 minutes, but oh well, sometimes you don't get what you You don't get what you start out for in life, and you take what you can get. So, all right, guys, let me let you go. Have a safe time. Happy trading, and bye-bye.